People are frightened today. We now have the highest inflation expectations in over 30 years. Are you going to get a $5,000 Doge stimulus check? I'll give you an answer there. That check would create more inflation, and this 1999 Taco Bell receipt proves just how insane the levels of inflation have been since then. Will we get hyperinflation? I've got more on all that and more on the inflation scare for the future. Also, what this all means for real estate investors. Hi, I'm Keith Weinhold, Get Rich Education founder, Forbes Real Estate Council member, best-selling author, and longtime real estate investor. Here is a graph of the insane amount of dollars that we've printed and dumped into the U.S. economy, much of it since the pandemic, almost $20 trillion. This is not the cause of inflation. Technically, this actually is the inflation, because inflation means an expansion of the money supply. Your dollar's diluted purchasing power is the effect, though. That is the result of all this printing. So we'll look at just how bad that is and then what you can do about it. Really, home prices and grocery prices, they're hardly up in real terms. The dollar is down because we printed like crazy, and the problem is when wages don't keep up. Look at the market distortions this creates. When everyday people like you and central banks alike are scared about inflation, they flee to the safety of gold. Since 2000, gold has outperformed the S&P 500 stock index by 2.5 times. That's crazy. Later today, I've got more on how inflation punishes stock investors to an unconscionably miserable extent that you probably never thought about before. But first, let's look at something everyday Americans see. These comparisons of McDonald's and Taco Bell prices pre-pandemic to mid-2024. In these McDonald's menu items, prices are up an average of 141% over just the past 4 to 5 years. At Taco Bell, the price increase across those items is more than 57%. But let me show you something that could leave you slack-jawed or even flabbergasted. And your slack-jawed condition will slap back afterward, don't worry. This 1999 Taco Bell receipt was found perfectly preserved in the pages of a book. It shows a complete meal for $3.50. It was actually just $3.26, and the rest was tax added in. Yes, that's $3.50 for a chili cheese burrito, a taco, nachos, and a 16-ounce Pepsi. The combined total from 1999. Well, how much do you think those same items would cost today? I went to the Taco Bell website and found out. I mean, what an inflation measuring stick this is. What cost $3.50 at Taco Bell in 1999? Just look at today's total: $3.49, $1.79, $2.89, and $2.49. That's a $10.66 total. $11.44 total with tax, using the same tax rate. Okay, so today it's $11.44, and they also ask you a question at Taco Bell if you want to round up for the kids or something like that. And just watch, pretty soon they'll request a tip too, something that they sure weren't doing in 1999. That's a 227% price increase. Few people's wages have risen that much since 1999, and that's the problem, 227%. Hey, I told you that you'd be left slack-jawed and flabbergasted. How much do you think the median home price has risen since then? It was $158,700 back in 1999. Today, it's $419,200. That is 164%. Now we'll get to what Donald Trump and Jerome Powell say about reining in inflation in a moment, and your Doge stimulus check. But all right, get this. Now, it's not an apples to apples comparison, but this is interesting because Taco Bell is a fast food restaurant, and this is the price of an item, a consumer item at a sports stadium, which is inflated. But you know, both are places that everyday Americans frequent. As a prelude to college basketball's March Madness tournament, for the first time ever, the SEC sold beer at its tournament. The price for one large premium draft beer is $17.50. So before tax or tips, $17.50 for one beer. All in, that might be 20 bucks or more, and I doubt that the beer is like really that premium. I mean, you know what you get at stadiums. So we look at inflation. One beer today is at least 5 times the cost of an entire Taco Bell meal in 1999. Maybe if Taco Bell sold beer, that beer would cost 2 to 3 times today what their entire meal cost back in 1999. Here's the thing. Inflation begets more inflation expectations. Reuters recently reported that over the next 5 years, consumers saw inflation running at 3.9%. That was the highest reading since February of 1993, more than 30 years ago. Yes, tariff pressures are a huge concern. I mean, that's about another 4% added on to today's prices, which is double the 2% amount that Jerome Powell and the Fed want to keep inflation at. And, well, what are the powers that be going to do about this? Before my answer, remember that back on the campaign trail, Trump vehemently vowed to lower inflation.
Together we will deliver low taxes, low regulations, low energy costs, low interest rates, low inflation, so that everyone can afford groceries, a car, and a home. Common sense.
Now, looking ahead, the Fed is in major wait and see mode. Economists, and even Senator Mitch McConnell, warn that President Donald Trump's tariffs could spike consumer prices. And look, if Jerome Powell and the Fed were serious about tackling inflation, they'd discuss raising rates. Instead, they're still talking about 2 rate cuts this year. And the Fed even revised their own inflation expectations from 2.5% up to 2.8%, 2.5 up to 2.8. Like they really can't control it, and they really can't keep it at 2% like they want to. I mean, inflation is like cheating. It's like saying, we're okay with debasing the currency that you've already worked for. Well, the government reports how much they're cheating with the CPI and their other measures, and almost everyone agrees that they're underreporting the true higher inflation figure. I mean, this is like you being okay with your spouse cheating and saying, just tell me every month how many people you cheated with. Oh, and then even that will be underreported. Gosh, that's price inflation. And that is the stuff that's highly perceptible. Okay, you've been seeing that effect all of your life. It's making most people poorer. It's making real estate investors wealthier. I'll get to that. But there's another type of inflation that you're paying every single day that you might have never thought about before. And before I get to that, go ahead and put a like on the video if you like how I'm breaking it down here. Thanks a lot for the thumbs up. The inflation type that few people consider is service inflation. What are some examples of service inflation? An obvious one is grocery self-checkout. You're taking the time and doing the work of scanning your groceries, yet they sure aren't lowering the prices of your lettuce, carrots, and beef jerky to compensate you for your work. So you're paying the same price or a higher price for a lower service level. Here's another example that you may not have thought about. Growing up, the Postal Service delivered mail right to my parents' porch, and they still do deliver mail right to my parents' porch. Their neighborhood was built more than 100 years ago. But look, when new neighborhoods are built today, like places I've lived and perhaps where you live, the Postal Service doesn't deliver mail right to your individual mailbox on your porch. Today, you have to walk both ways to your neighborhood's mailbox cluster, or maybe even drive to get your mail. Your mail isn't being delivered. You have to go pick it up now. And they don't lower the price for that reduced service level. That's service inflation. And look, service inflation is here to stay. That's because companies make investments in it. The supermarket bought those self-checkout kiosks. That's not going away. The Postal Service bought those mailbox clusters. All right, so with this rampant price inflation and service inflation and the other forms of inflation I've talked about here before, like stagflation, tipflation, shrinkflation and skimpflation. I mean, really, what's an individual investor like you supposed to do? Wait for a Doge stimulus check from the government spending slash that they're making? No, it probably wouldn't even be as much as $5,000 like some have floated, if it happens at all. Now, if you're a taxpayer, you might get a check, but it would require approval by Congress first. And to give you some idea here, if $1 trillion in savings are found, the check would be about $2,500 is what many have calculated. And whatever it's going to be, I mean, this can help consumers and you handle costs from inflation in the short term. But in the long run, it just creates more inflation itself. You'll have even more dollars chasing the same amount of goods and services. Prices would spike. Would it create hyperinflation? No, almost nothing out there will. And let me address, whenever people get fearful another wave of inflation is coming, tariff-induced or otherwise, I mean, let's not get carried away and think that hyperinflation is coming. Although definitions vary, the most accepted definition by economists is a 50% inflation rate per month. Not annually, per month is hyperinflation. That would be really hard to get. Few people understand how punishing inflation is. It obliterates stock and mutual fund investors, so it's not the place to be. Think about it this way. First, any chart that you look at has to be tilted a few degrees clockwise to get your real return, because most stock charts are not inflation adjusted. And here's another way to think about how inflation wipes out a stock investor's gains. If the S&P 500 gains 10%, but there's 5% inflation, that's a 50% hidden tax on your gain. That's not it. You might also pay capital gains tax on top of that. Savers really get destroyed. If your bond yield or your savings account pays 4% interest and there's 5% inflation, that's a 125% hidden tax on your gain. You'd also pay tax on top of that at higher earned income tax rates. So stocks and savings are not the answer. Real estate and borrowing is the answer. And more inflation is almost completely predictable. It's just at what rate we don't know. A history check here, it's almost been unending inflation continuously since the 1950s. When the dollar was totally removed from the gold standard in 1971, it really freed the dollar to be debased, as you can see. These facts necessitate that you almost have to either do one of two things: start your own business, which is tough, or become a real estate investor, which is easier in order to beat all this and ever acquire wealth. Any viewer here knows that the formula for beating it is not highly sophisticated or esoteric. It doesn't require any degree or certification or real estate license. In fact, it's just 5 words: own income properties with loans. When you do, you're not just hedging against inflation. Inflation produces 3 profit centers, something that I coined as the inflation triple crown. You win 3 ways: with asset price inflation, debt debasement, and cash flow enhancement. Asset price inflation means you've leveraged your gains so that your asset can 4 to 5x inflation. Debt debasement means that inflation passively lightens our debt burdens for us. And thirdly, cash flow enhancement boosts our net rental income above the inflation rate because our principal and interest payment every month stays fixed. Own income properties with loans. Right now, I'm producing the most important video series I've ever made in more than 10 years as a channel here. It is course level instruction, and I'm soon releasing it free right here on the channel. Though real estate investors benefit from inflation 3 ways, overall they profit 5 ways at the same time, such that a return of 25 to 30% plus on real estate is not only common, you can actually expect it with rental property when you buy right. I do. And how can this be true? Because on the surface it sounds a little far-fetched or like it must entail some high-flying risk to get a return like that. No, 25 to 30% plus is common just from buy and hold property, and your return is also less volatile than stocks. This is even with conservative estimates, even with an expensive surprise plumbing problem factored in. Most people just don't know how to figure out their return, but this is where I show you how. Because real estate has made more ordinary people wealthy than anything else, and that's specifically because it can pay you 5 ways at the same time. I mean, this is why you can retire early. You're finally going to see how, and I'll add up your return in a clear way in my forthcoming Real Estate Pays 5 Ways series of 5 videos. Course level instruction updated for today's time. So stay tuned by hitting subscribe, and you've also got to hit the notification bell. That's the only way that you'll be sure to get them. Inflation is even worse than you think because it's ruining society and even rewarding companies for unethical behavior, and this really harms your quality of life in ways that you've never thought about before. The legendary Doug Casey and I recently discussed that in this video right here.